to the deep dive. Today we're going to really dig deep into this whole anti-money laundering thing in banking.
AML for short.
Right. AML, thanks for that. It's a topic that honestly might sound kind of dry at first.
Yeah, a lot of regulations and acronyms.
Exactly. But you've given us a mountain of material that suggests it's actually way more interesting than it sounds.
That's absolutely. It's a constant cat and mouse game between the criminals and those trying to stop them.
So our mission today is to break down that material, cut through the jargon,
And really make it clear why this matters to everyone.
Perfect. Now, I get the basic idea, right? Money laundering is about making dirty money look clean.
Making it untraceable, like it came from legitimate sources.
Right. But what really struck me in all this material is the sheer scale of these operations.
We're not talking about stuffing cash under a mattress anymore.
No kidding. Like, one of the first things I came across was this BCCI scandal back in the 80s.
The Bank of Credit and Commerce International.
Yeah, that one. It sounded like something out of a spy movie.
It practically was. They were moving billions with a B across borders, allegedly for drug cartels, terrorists, corrupt officials, you name it.
Billions. That's insane.
Did they get away with it?
Not in the end. The whole thing imploded, led to major reforms.
But I guess it also showed just how sophisticated these operations can be.
And how determined criminals are to find ways to clean their dirty money.
Speaking of sophisticated, the HSBC case from 2012 really caught my eye, too.
Yeah, that was a major wake-up call for the entire banking industry.
A $1.9 billion fine. Clearly, they missed something big.
They failed to spot transactions linked to Mexican drug cartels. Huge amounts of money flowing through their systems.
It makes you wonder how much slips through the cracks even today.
It's a constant battle, for sure.
And then there's that Danske Bank case, which I guess shows it's not just a problem in developing countries.
No, not at all. Danske Bank, a well-known European bank, had its Estonian branch caught up in a massive money laundering scheme.
I remember reading about that, something like 200 billion laundered through shell companies. Exactly. It highlighted how vulnerabilities can exist even in seemingly well-regulated institutions.
So clearly, money laundering is a persistent threat, constantly evolving.
It's a bit like a virus. It mutates and finds new ways to infect the system.
What are some of the biggest challenges banks are facing right now? I mean, where do they even start?
Well, emerging markets are definitely one area of concern.
Because the regulations might not be as strict.
Exactly. And then you've got the rise of cryptocurrencies, which adds a whole new layer of complexity.
I can see how those would be attractive to criminals.
The anonymity, the decentralized nature, it makes tracing funds a lot harder.
So crypto is a major headache for AML compliance.
It's definitely a challenge, one that banks are still figuring out how to address effectively.
What else? What other headaches are keeping them up at night?
Trade-based money laundering, or TBML.
DBML, what's that?
Basically, using legitimate trade transactions to mask illicit funds.
Oh, I see. Like over or under invoicing goods to move money across borders.
That's one way to do it. It's incredibly difficult to detect because it's hidden within the vast volume of global trade.
So with all these threats, all these ways criminals are trying to game the system, how are banks even beginning to protect themselves?
Well, it starts with a strong foundation.
Like what?
A robust governance framework, for one.
What does that even mean?
It means having clear policies and procedures in place, a dedicated AML compliance team.
Okay, so a team of experts focused on this.
Exactly. And they need a comprehensive risk assessment framework.
To figure out where they're most vulnerable, right?
Exactly. And it's not just about what's happening inside the bank. They also have to consider the broader regulatory landscape.
So what are the big players on the regulatory side?
You've got global bodies like the Financial Action Task Force or FATF setting the standard.
So it's not just a U.S. thing. There are international standards everyone has to follow.
Absolutely. And then in the U.S., you've got FinCEN, the Financial Crimes Enforcement Network.
They're the ones making sure banks are actually following the rules.
Right. They have a lot of power to investigate and enforce AML regulations.
So there's no room for banks to just say, oh, we didn't know.
Not at all. Ignorance is no excuse in this game.
It sounds like a lot to keep up with.
It definitely is. Banks have to be constantly adapting, refining their systems, staying ahead of the criminals.
So speaking of staying ahead, what are some of the best practices out there? What are banks actually doing to combat money laundering?
One key approach is what's called risk-based AML.
Risk-based, so not just a one-size-fits-all approach.
Exactly. Banks tailor their efforts based on their specific vulnerabilities.
So a bank specializing in high-net-worth individuals would have a different AML program than, say, a local credit union.
Exactly. They face different risks, so their approach has to be tailored accordingly.
It makes sense. And I imagine knowing your customer is a huge part of this.
Absolutely. Customer due diligence, or CDD, is all about verifying identities, understanding a client's financial activity.
And making sure it's legitimate.
Right. And for higher risk clients like politically exposed persons, or
Yeah.
PEP,
PPs. Who are those?
think government officials, high-ranking politicians, people whose positions could be abused.
Oh, I see. So they require even more scrutiny.
Absolutely.
Mm-hmm.
Banks have to go the extra mile to understand their source of wealth, monitor their transactions.
That makes sense. More risk, more scrutiny. But all this due diligence must be a lot of work, even for a small team.
It is, which is why technology is becoming increasingly important in AML efforts.
Oh, I bet. We hear so much about AI these days.
Rightfully so. AI is being used to automate a lot of the manual tasks involved in CDD.
Like what?
Well, imagine AI-powered tools that can scan through massive databases of PPs.
To flag anyone who might be trying to open an account.
Exactly. And it could even analyze news articles and social media to identify potential risks.
That's incredible. It's like having a team of investigators working around the clock.
And it frees up human analysts to focus on the more complex cases.
So it's not about replacing humans, but making them more effective.
Exactly. It's about using technology to augment human capabilities.
Okay, so we've got risk-based approaches, enhanced due diligence, all powered by fancy algorithms.
But it doesn't stop there. The real key is ongoing monitoring.
So it's not just about checking someone out when they open an account. It's about keeping an eye on them over time.
Precisely. That's where transaction monitoring systems come in.
What are those?
Imagine sophisticated software that's constantly scanning through millions of transactions.
Like a digital detective looking for anything suspicious.
Exactly. They're programmed to look for patterns that might indicate money laundering.
What kind of patterns?
It could be a sudden spike in transaction volume.
For someone who normally doesn't do much business?
Right. Or unusual transfers to high-risk countries.
Places known for money laundering.
Exactly. Or complex layering schemes designed to obscure the money trail.
So these systems are getting pretty good at spotting the bad guys.
They're getting better all the time. AI is playing a huge role in that.
So when a system flags something suspicious, what happens then?
That's when the human analysts step in.
So it's not all automated.
Not yet, at least. They investigate further, request documentation, maybe even contact law enforcement.
So it's a combination of technology and human judgment.
Absolutely. You need both to have an effective AML program.
It makes sense. But it takes more than just one bank doing this, right?
Oh, absolutely. Collaboration is key.
Between banks.
Yes. And with law enforcement agencies as well.
So they're all sharing information, working together to catch the bad guys.
Exactly. It's a team effort, a global effort.
And it's not just about playing catch-up, right? Banks are also using technology to try and predict future money laundering activities.
You bet. That's where AI is really starting to shine.
Can you give us some examples?
Sure. Banks are now using AI to analyze past trends and patterns.
Like a crystal ball for financial crime.
In a way, yes. By understanding how criminals have operated in the past, AI can help predict how they might try to exploit the system in the future.
That's amazing. So they can be more proactive rather than just reactive.
Exactly. And AI is also helping to streamline investigations, prioritize alerts for compliance teams, even uncover hidden connections that would have taken humans months to find.
So it's not just about catching the bad guys, it's about making the whole AML process more efficient.
Absolutely. AI is transforming the AML landscape in a big way.
And then there's blockchain, which seems to be the answer to everything these days.
Well, blockchain does have the potential to be a game changer for AML.
How so?
Because of its decentralized and transparent nature, blockchain could make it much easier to trace the flow of funds.
Even across borders and through complex transactions.
Exactly. Imagine a system where every transaction is recorded on an immutable ledger, accessible to authorized parties.
So you could literally follow the money trail back to its source no matter how many twists and turns it takes.
That's the idea. It would make it much harder for criminals to hide their activities.
And then there's this whole world of automated transaction monitoring systems.
Oh, yes. Those are evolving rapidly, too. We're talking about systems that can provide real-time alerts, generate reports, and help banks respond to suspicious activity much faster.
So it's not just about catching criminals after the fact. It's about stopping them in their tracks.
Precisely. And these systems are becoming increasingly sophisticated thanks to, you guessed it, AI and machine learning.
So it sounds like the AML landscape is becoming increasingly tech-driven.
It is, and that's leading to a whole new set of norms in banking.
What kind of norms?
Well, for one, regulatory compliance is becoming even more important.
So banks are really feeling the pressure to get their act together.
They are, and the stakes are higher than ever.
Because the fines can be huge.
Exactly. And then there's the reputational damage to consider.
No bank wants to be known as the one that let the money launderers slip through.
Absolutely. And then there's the loss of customer trust.
Which can be even more costly in the long run.
You bet. So banks are investing heavily in technology, in training, in everything they can to strengthen their AML programs.
So it's not just about compliance, it's about survival.
It's about both. And it's about protecting the integrity of the financial system as a whole.
So this is a battle that affects everyone, not just the banks themselves?
Absolutely. Money laundering is a global problem with global consequences.
And it sounds like we're only just beginning to understand the full scope of the challenge.
We are. But the good news is that we're also developing new tools and strategies to fight back.
So it's an exciting time to be in this field.
It is. It's challenging, but it's also incredibly rewarding to know that you're playing a part in protecting people from harm.
Well said. And on that note, I think we've covered a lot of ground in this first part of our deep dive.
We have. We've laid the foundation for a deeper understanding of AML.
But there's still so much more to explore.
Absolutely. We've only just scratched the surface.
So stay tuned for part 2 of our deep dive, where we'll be getting into even more detail.
We'll be looking at real-world examples, case studies, and the latest developments in AML technology and regulation.
It's going to be fascinating. We'll see you then.
See you then.
So we've covered a lot of ground on how banks are trying to get ahead of the money launderers, but I'm curious about real-world examples. It's one thing to talk about concepts, but how do these actually play out?
That's a great point.
Ugh.
Let's get specific. You mentioned correspondent banking earlier, which is a prime example of where things can get tricky.
Right, because it's basically one bank vouching for another across borders, which seems inherently risky.
It is. Imagine Bank A in the U.S. needs to send a payment to someone who banks with Bank B in, say, a country with less strict AML regulations. Bank A uses his correspondent relationship with Bank C, which has a presence in that country, to facilitate the transfer. But if Bank C isn't diligently scrutinizing its clients, that creates a vulnerability.
So it's like a chain of trust where one weak link can expose the whole system.
Exactly. That's why banks are getting much more stringent about who they partner with. They're not just assuming a correspondent bank is doing their due diligence. They're actively assessing their AML programs, understanding their customer base, and even the types of transactions they handle.
It sounds like correspondent banking is getting its own version of know your customer, but on a bank-to-bank level.
You could say that. And it's not just about checking boxes. Banks are leveraging technology to really dig deep. They're using data analytics to map out correspondent networks, identify potential red flags, and even assess the overall risk of a particular relationship.
Okay, so that's one example. What about enhanced due diligence on high-risk individuals? How does that play out in practice?
Let's say someone walks into a bank wanting to open an account, and they happen to be a high-ranking government official from another country. A PP, as we discussed earlier.
Right, someone whose position could be misused.
Exactly. Now, opening an account for a PP isn't automatically forbidden, but it triggers a much higher level of scrutiny. The bank will go beyond the standard identity verification and really dig deep into their source of wealth. They'll want to see things like tax records, business ownership documents, proof of income, anything that corroborates their story.
And I imagine their transactions will be monitored much more closely, too.
Absolutely. Every transaction will be scrutinized for anything unusual. Large transfers, especially to high-risk jurisdictions, sudden changes in spending patterns, any activity that deviates from their expected profile. And again, technology plays a key role here.
How so?
Banks are using AI-powered tools to continuously scan PEP databases, watch lists, even news articles for any red flags associated with their high-risk clients. It's like having a dedicated research team working around the clock to make sure nothing slips through the cracks.
That sounds incredibly efficient. It must take a huge burden off compliance teams.
It does. And it's not just about efficiency. AI can often spot subtle connections or patterns that humans might miss. It's like having a superpowered detective working alongside human analysts to identify and mitigate potential risks.
Okay, so we've got risk-based approaches, enhanced due diligence, all powered by increasingly sophisticated technology. What about the ongoing monitoring of transactions once an account is open?
That's where transaction monitoring systems really shine. These systems are like the digital eyes and ears of AML compliance. They're constantly scanning millions of transactions in real time, looking for the proverbial needle in the haystack.
And what kind of needles are they looking for? What constitutes a red flag in this digital world?
It could be a whole range of things, and it's not always about huge sums of money. One example is what's called structuring, where someone makes multiple deposits just below the reporting threshold to avoid detection. Another red flag is frequent transfers to high-risk countries, especially if they don't align with the customer's usual activity.
So it's about looking for patterns that deviate from the norm. But don't these systems generate a lot of false positives, flagging legitimate transactions as suspicious?
They can, especially older rule-based systems. That's why banks are increasingly turning to AI and machine learning. These algorithms can learn from past data, distinguish between legitimate and suspicious behavior with much greater accuracy, and even adapt to new money laundering tactics.
So AI is helping to make these systems smarter and more efficient. But even with AI, I imagine there's still times when human intervention is needed.
Absolutely. Let's say a system flags a transaction as potentially suspicious. It's not going to automatically freeze the account or call the police. Instead, the alert gets routed to a human analyst who investigates further. They'll look at the customer's profile, their transaction history, maybe request additional documentation, essentially connecting the dots to determine if there's genuine cause for concern.
So it's a partnership, really. Technology providing the initial screening and humans using their judgment and expertise to make the final call.
Exactly. Technology is a powerful tool, but it's not a substitute for human intelligence and experience. The best AML programs use technology to augment human capabilities, not replace them.
It makes sense. So we've talked a lot about what banks are doing, but what about the regulators? What role do they play in all this?
Regulators are absolutely critical. They're the ones setting the standards, issuing guidance, and ensuring that banks are actually implementing effective AML programs. Think of them as the referees, making sure everyone is playing by the rules.
And are they keeping up with the rapid pace of technological change in the AML space?
They're definitely trying. Regulators are becoming much more data-driven in their approach. They're using sophisticated analytics tools to monitor trends, identify emerging risks, and even target their supervisory efforts more effectively. It's no longer just about checking boxes. They're using data to get a much deeper understanding of how money laundering is evolving and how banks are responding.
So they're leveraging technology to be more proactive and effective.
Exactly. And they're also promoting greater collaboration and information sharing between banks and even across borders.
Why is that important?
Because money laundering is a global problem that requires a global solution. Criminals don't respect national boundaries, so regulators need to work together to close the gaps and make it harder for criminals to exploit differences in regulations between countries.
It sounds like the role of the regulator is becoming increasingly complex and demanding.
It definitely is. They need to be tech-savvy, data-driven, collaborative, and constantly learning and adapting to stay ahead of the curve. And they need to strike a balance between enforcing regulations and fostering innovation in the AML space.
Speaking of innovation, we've mentioned RegTech a few times. Could you elaborate a bit more on how that's playing out in the real world?
Sure. We're seeing a whole wave of RegTech companies developing solutions specifically designed to help banks meet their AML obligations more efficiently and cost-effectively. For example, there are platforms that automate much of the KYC process using AI to verify identities, screen against watch lists, and even assess risk levels.
So that frees up compliance teams to focus on the more complex cases.
Exactly. And there are tools that use machine learning to make transaction monitoring systems much more intelligent and accurate, reducing false positives and helping analysts focus on the truly suspicious activity. We're also seeing solutions that leverage blockchain technology to enhance transparency and traceability in financial transactions, making it much harder for criminals to hide their activities.
It sounds like RegTech is becoming an indispensable part of the AML ecosystem.
It absolutely is. And it's not just about compliance. RegTech is also helping banks improve their overall risk management capabilities, gain valuable insights from their data, and even enhance the customer experience.
So it's a win-win for both banks and their customers.
Exactly. And as technology continues to evolve, we can expect to see even more innovative solutions emerge, helping banks stay ahead of the curve in the fight against money laundering. But even with all this technological advancement, one thing remains constant: the importance of human judgment, ethics, and culture.
That's a perfect segue to something I wanted to touch on, the human side of AML. We've talked about the importance of human analysts working alongside AI, but what about the overall culture within a bank? How does that impact the effectiveness of AML efforts?
Culture is absolutely critical. You can have the best technology and regulations in the world, But if your employees aren't bought into the importance of AML, it won't be truly effective.
So it's about creating a culture of compliance from the top down.
Exactly. It starts with leadership, making AML compliance a top priority and communicating that message clearly throughout the organization. They need to walk the walk and talk the talk, demonstrating through their actions that AML is not just a box-ticking exercise, but a core value that underpins everything the bank does.
Okay, so you've got the leadership setting the tone. But how do you actually translate that into a culture that permeates the entire organization?
It's about more than just writing policies and putting up posters. You need to embed AML into the fabric of the bank's operations, into its DNA.
What does that look like in practice?
It starts with making AML training engaging and relevant for employees at all levels. Instead of dry compliance lectures, use real-life case studies, interactive scenarios, even gamification to make learning about AML more engaging and memorable.
So make it relevant to their day-to-day work.
Exactly. Help them understand how AML impacts their specific roles and responsibilities, and create clear channels for reporting suspicious activity, ensuring that employees feel safe and supported if they do raise concerns.
Because even with all the technology, it's often the people on the front lines who are in the best position to spot red flags.
Absolutely. They're the ones interacting with customers, seeing the transactions firsthand. Empowering them to be the eyes and ears of AML compliance is crucial.
So it's about creating an environment where everyone feels like they have a role to play in protecting the bank and the financial system from abuse.
Exactly. And it's about celebrating and rewarding those who demonstrate a strong commitment to AML compliance. Recognize their contributions, share success stories, make it clear that AML is not just a compliance burden, but a crucial part of the bank's mission and values.
It sounds like building a strong AML culture is an ongoing process, not a one-time event.
It absolutely is.
Yeah.
It requires constant attention reinforcement and adaptation. The AML landscape is constantly evolving, and so too must the culture within banks. But it's an investment worth making, because ultimately a strong AML culture is not just about protecting the bank's reputation and bottom line. It's about protecting people from the very real harms of financial crime.
Well said. And that brings us to something we've touched on a few times throughout this conversation, but haven't explored in depth. We've talked about the mechanics of AML, the technology, the regulations.
All the moving parts.
Right. But what I keep coming back to is the human element. Like, we can't forget that this isn't just some abstract concept.
No, absolutely not.
There are real people whose lives are affected by financial crime.
Every dollar laundered, every transaction that goes undetected, it represents a victim somewhere.
It's easy to get lost in the technical details.
The algorithms, the regulations.
Exactly. But we have to remember that this is about more than just banks and financial institutions.
It's about people. It's about societies.
Like those billions laundered through BCCI.
That wasn't just about numbers on a spreadsheet.
Right. That money fueled drug trafficking, human trafficking, terrorism, corruption.
Activities that cause immense suffering.
And it undermines the very fabric of our societies.
Erodes trust in institutions, weakens economies.
So AML is about much more than just compliance.
It's about protecting people from harm.
It's about making sure the financial system serves its intended purpose.
To facilitate legitimate economic activity.
To improve people's lives, not make them worse.
And to uphold the rule of law.
Exactly. And as we develop these incredibly powerful tools to combat financial crime,
AI, machine learning, blockchain,
we have to be very careful not to overstep.
to make sure we're not sacrificing individual privacy and civil liberties in the process.
It's a delicate balance, isn't it?
It is. It's a constant tension between security and freedom.
We want to catch the criminals, but we don't want to create a surveillance state where everyone's under suspicion.
Exactly. We need to make sure that AML measures are proportionate and necessary.
And subject to appropriate oversight.
Absolutely. We can't just blindly trust the algorithms.
We need transparency, accountability, and a robust legal framework to protect individual rights.
And we need to have an open and honest conversation about the ethical implications of these technologies.
It's not just a conversation for the experts.
No, it's a conversation for everyone.
Because this affects all of us.
AML is too important to be left to just the banks and the regulators.
Well, I think this has been an incredibly insightful deep dive.
You've covered so much ground.
From the basics of money laundering to the cutting edge of AI and everything in between.
The evolving regulatory landscape, the importance of human judgment and ethics, the profound impact of financial crime on individuals and societies.
It's been a real eye-opener for me.
I think the key takeaway for our listeners is that AML is not a static field.
It's constantly evolving.
As criminals adapt their tactics, we need to adapt ours.
We need to stay informed, engaged, and vigilant.
And we need to work together.
Banks, regulators, law enforcement technology providers, even individual citizens.
We all have a role to play in protecting the financial system from abuse.
It's a global challenge that requires a global response.
Absolutely. And it's a challenge that's worth taking on.
Because ultimately, it's about more than just money.
It's about protecting people and preserving the integrity of our societies.
Well said. Thank you for joining us on this deep dive into the world of anti-money laundering.
It's been a pleasure.
And to our listeners, we hope you found this conversation informative and thought-provoking.
Until next time, stay curious and stay vigilant.